Welcome to Investors Insights. Our topic today is the Fed is undefeated. We're excited to have you join us today and hope you'll follow us throughout the week on our social media on Facebook, LinkedIn, and Twitter, where we will continue the dialogue that we're having this morning in regards to the topics that we think could impact your portfolio or what we're seeing evolve in the economy. Joining me this morning is my distinguished colleague, Trey Booth. Trey, it's good to be on camera here with you. Of course, we just finished a great discussion in regards to what the public is saying right now, the media, that there's a big debate going on between the bulls and the bears. Mm-hmm. Some people believe this market can continue stronger. Others believe that the underlying effects are going to start to crumble and we're going to see this market turn down. There are no guarantees, but one thing that Trey and I can discuss this morning is that you don't fight the Fed.
Right.
The trend is your friend. And at this point, the Fed is undefeated. And we're getting ready to give you some information, which we think will validate that this market still may have upside to it. Mm-hmm. So Trey, as we were going back and forth this morning on some of the data, some people are saying, well, you know, the S&P 500 has rallied. That's been great, but it's been led by so few stocks that some of the underlying stocks of the S&P 500 have not followed with that same strength. At the same time, though, you're getting ready to talk about earnings and jobs and the role that plays in the strength of this market. Go ahead and give us some of that information.
Yeah, absolutely. Your topic, Greg, the Fed is undefeated, is 100% correct. If the Fed wants interest rates to move, they can push interest rates. If the Fed wants the stock market to move, they can push the stock market. They have proven that time and time again. Where the uncertainty comes in is when will the Fed not want the stock market to move higher? When will the Fed allow interest rates to move higher? And that's being pushed by their stimulus. And so two big data points that we've been watching since the beginning of this turnaround in the market has been Fed stimulus versus market strength and earnings in the economy. And so it's a race against time to a certain degree of when will earnings catch up to where the market is priced to justify the current price to earnings ratio versus when the Fed stops pumping money into the system and pushing prices higher. And so it's been something we're watching very closely. Can earnings catch up to current market levels based on Fed stimulus before the Fed stops providing that stimulus? So we've been watching earnings. Last week, 35% of the S&P 500 companies reported. Now we're at 296 of the 500 largest publicly traded companies in the U.S. have reported their earnings. And the earnings numbers and revenue numbers have been fantastic. So that is something very important for us to watch, is that our earnings catching up with the price level. And so just to put it into kind of more basic level, we're looking at the total market, the S&P 500, the 500 largest companies. They are expected to earn around $200 a share this year. So with the market trading at around $4,400, that kind of gives you a good price to earnings ratio. So that is $30 higher than where expectations started the year. So how do you conceptualize $30? Well, if you put a 20 multiple on $30 worth of earnings, that is $600 worth of price movement. So the S&P trading around $4,400, if earnings are $30 higher, you could justify a $5,000 S&P 500. So not saying that's going to happen, but that's how earnings really can push the valuation of the market. $1 of earning the S&P could be worth 30, 20, 30, 15 points on the market. That's a huge move. And so we really need to see earnings move higher to justify current prices, and that's what's occurring. On the other end of the race, we have the Fed. When will the Fed stop stimulating the stock market and stimulating the bond market? The Fed is continuing to buy $120 billion worth of bonds every single month.
And that has a huge impact.
That is, if you want to fight that tailwind, I'll have at it. But I think it's dangerous to fight the Fed that has that much firepower. So when would they slow down? We've said month after month, I feel like we're a broken record, but it's this important that jobs, the Fed is watching jobs. We are still around 7 million jobs short of where we were at before the pandemic. And on Friday, we will get the July jobs number. And the expectations are for around 1 million new jobs to have been created in the month of July. Will we exceed that? Will we disappoint? And then how will the Fed react? You may see a disappointing number on Friday and the market shoot up. That's saying that the market is expecting the Fed to continue stimulus, or vice versa. So we're watching earnings this week. That's backwards looking, but then forwards looking to see who's winning the race. where are the jobs numbers? Because that may dictate how quickly the Fed pulls back on stimulus. So very big week to see, the fighting the Fed and where we might be going into the future.
No, I totally agree with you. As we got into the numbers this morning, I thought you were right on in terms of your analysis. And I also think you're making a big point here that we're not hearing in the media is don't fight the Fed. Like you said, the Fed has this flexibility to participate in the market in a variety of ways, and they are determined to use jobs as a key indicator. And let me say this, it's been a long time since we've had a Fed chairman and a Fed board that has really been so pro-jobs oriented like we're seeing now.
100% correct. Maybe kind of a concern going into 2022 or later this year is the chairman, Jerome Powell, will be up for reappointment. That's some uncertainty. But as things stand now, we know the Fed, we know their policy, and we know where markets stand. And so now we just need to look to the future a little bit.
Yeah. So on that note, let us just emphasize, the Fed is undefeated. You've heard our data, our explanation. And in addition to that, while Jerome Powell is still chairman of the Fed, and before he comes up for reappointment, let's take full advantage of this. We think there's strength in the market, and some of these bears that are out there, their data doesn't match up. So we're going to keep you informed. We can't believe that we're now starting the month of August, and we've only got 5 more months of 2021. And we're going throughout this to continue to navigate, to give this information as to how it can impact your portfolio in relation to your financial blueprint. Have a great week, and we'll talk soon. Thanks.